Good morning. Welcome to Stock Market Today. It's Monday, May 6th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for the free email to follow along with this show. Get daily stock ideas for you to consider. Hits your inbox every trading day before the market opens, and hopefully everybody had a great weekend and is well rested because we are off to a bit of a wild start here on a Monday morning. U.S. equities were higher in Friday's trading. Let's recap Friday first. Following the release of stronger than expected non-farm payroll report on Friday. That seems like a long time ago already, but it was only on Friday. All of the major sectors closed higher on the day. Treasuries were stronger across the curve, sending yields lower. Dollar was down on the major crosses. Gold finished up 70 basis points, and WTI crude closed up 20 basis points. At the sector level, discretionary industrials and comm services outperformed. Utilities, REITs, and staples underperformed. But as I said, all of the sectors were higher on the day on Friday. But completely different story here this morning as we get to the desk. S&P futures are down 1.8%. After markets finished higher last week. Asian markets are under significant pressure. China down more than 5.5%. Remember, President Trump tweeted yesterday he's thinking about increasing the tariffs on another $200 billion of goods from China from 10% to 25%. That has markets selling off here today. China down 5.5%. Biggest drop since February 16. Japan remains closed for holiday. European markets are also sharply lower. Treasuries are stronger, but not as much as you would think given the global equity weakness. Dollar is weaker versus the yen, but stronger against the euro. Gold up 10 basis points, and WTI crude is down 1% on the morning to start the week. So let's look at it. Futures point to a lower open following those trade comments. Now, we've been highlighting support in the 2890 to 2810 zone and then near 2850. What I will highlight is that as of this recording and as of the writing of my note here this morning, Monday morning at around 7:30 a.m., S&P futures are at about 2895, 2898. So far, holding this support zone. Resistance comes into play 2940. We're watching for RSI to hold above 40, right? If on these pullbacks, if the RSI holds above 40, that's a sign that momentum remains in bullish ranges. That's a sign that it's just a regular pullback within the context of the uptrend, and we can get aggressive on the long side of the portfolio. Now, we've been mapping this out for you for a couple of weeks now. We've been highlighting the key support and resistance levels and what we would look for should those support and resistance levels take place. Well, we're starting to see support tested. The question we have to ask ourselves is this just a normal pullback within the context of the uptrend? So far, we never know for sure until it happens, but we just have to follow our playbook and manage risk. Use your stops as you're entering trades. Make sure you know where your stops are. For the market, as I said, RSI, we're watching it to hold above 40. Chaikin money flow remains bullish. So, going to be a lot of headlines today. Going to be a lot of fearful commentary out there about, is this the start of the next down leg in the market? And the question is, nobody knows. Have your plan. Have your process. You've been building bullish watch lists. If bullish or very bullish stocks in leading parts of the market become oversold, you can look for opportunities to enter, but manage your risk. Know where you're getting out if you're wrong. Your market in a minute. What I'm talking about, trade tensions send futures sharply lower this morning. We hit on that. We hit on the support and resistance levels. Small caps break through key resistance, but a pullback is likely. We've been watching that 160 level for IWM. Finally broke through on Friday, only to turn around and get this news here today. We'll see if it holds. Downtrend in the 10-year yield remains in place. Look for support at 2.4, especially as investors flock to treasuries in a flight to safety here today. Commodities remain under pressure as crude pulls back. Chaikin power bars for the major indexes. Dow 7-3 in favor of the bulls. S&P 500 154 bullish or very bullish stocks. 63 bearish or very bearish stocks. The Nasdaq at 26-9 up 1.6% on Friday, outperforming. Small caps, there's that small cap outperformance. Big thrust higher in this power bar ratio, 626 to 266. Bonds uptick, sending yields lower. Industrials had a nice day on Friday. Some Boeing news over the weekend, though, could weigh on that group, in addition to just genuine general market weakness. 22 bulls, 10 bears. According to the Chaikin Power Bar, small cap stocks and large cap stocks remain bullish. Remember, it's a process. We're following our process. We're trying to ignore the headlines as best as they can be. Follow your process, manage risk. Stock of the day, Lakeland Bank Corp, LBAI, closed at $17.10 on Friday, up 1.5%. Has a very bullish rating due to very strong earnings performance, very strong price volume activity, attractive financial metrics, positive expert activity. Very bullish stock, strong trend, strong industry group, type of name we want to consider. We can see here, downtrend goes into a consolidation and now a breakout. As a matter of fact, the stock triggered our relative strength breakout signal here today. Neither overbought nor oversold, but closer to an overbought condition. But we do have the makings of a bullish personality trend for Lakeland Bancorp here. What is a bullish personality trend? Rating turns bullish after being neutral or bearish, and the stock begins to outperform after being an underperformer. At the same time, you can see, you can just see the change of trend here. Obviously, the market's going to have some weakness here on the open this morning. You probably don't want to dive into a name that's rallied from 14 to 17 over the past couple of months, but we certainly want to be aware of a name like Lakeland because as the market pulls back and these stocks pull back to oversold conditions, we want to follow our process of buying leading stocks and leading industry groups. When those stocks become oversold, Lakeland could start to look interesting. Sector tracker now, movement in the major sectors of the last 5 days. Fins, top of the list, continuing to rally on the back of positive earnings. Healthcare continues to move higher after that oversold rally. I would expect a bit of a pause here today. I'm actually highlighting the pharma stocks in my notes Chaikin Analytics clients today. Pharma, a little bit too far, too fast on the ETF front. Eli Lilly looks like a compelling name on the bearish side of the portfolio. Industrials, look for them to give some back. Real estate staples and tech, middle of the road. Utilities also positive. Be interesting to see how real estate and utilities trade today. Will the bond proxies, will the safe havens outperform? Odds are that they will, but they have been underperforming the market of late. Obviously, it's a group we've been paying a lot of attention to, so we're going to watch that closely. Loser side of the board, past 5 days, discretionary materials, comms, and energy. We've talked at length on energy. We are bearish. We remain bearish. Dollar strength likely to keep the commodities under pressure. Energy is just not a spot we want to be right now. Our industry in focus today, aerospace and defense. 17 bullish or very bullish stocks. 0, count them 0, folks, bearish or very bearish stocks. Groups outperformed the S&P 500 by 1.96%, so call it 2% over the past 6 months. And that power bar ratio, which I just mentioned, is very strong. Group is ranked number 2 of 21 subsectors, and it's moved up 5 slots over the past week. 17 bulls, 0 bears. Some of the very bullish names in the group that we've talked that we should consider do the work. Don't just buy these stocks outright. We still have to do the work. Arconic, we touched on that one last week, and it's worked out, so we'll revisit it here today. Wesco Aircraft and Curtiss-Wright both kind of look interesting, though not yet outperforming to the degree that we want to see. So let's look at Arconic here because we highlighted it as a bullish personality change last week, and the stock has done well. Kudos to those of you who took the trade. Very bullish stock, strong trend. Sorry, folks. I just wanted to take a look at that. Strong trend. Metals, it's in the metals group as part of the aerospace and defense. I got a little sidetracked there. I wanted to make sure I had the right stock. But yeah, again, it's just kind of starting to move higher. Bullish personality change, trade remains in place. Want to chase it here today? Probably not. But obviously a name that we want to keep in consideration on the long side of the portfolio. Trending names now, yesterday's S&P 500 or Friday's S&P 500 gainers and losers. Newell up on earnings 13.5%. FLS 9.3% on earnings. Monster MNST was a monster on Friday, 8.8% following their earnings. Dentsply 6.9% on their earnings announcement, and RMD earnings send that stock higher by 6.5%. On the loser side of the board, Cognizant, we touched on that one on Friday. A rare miss by them. Numbers moved down. Bunch of downgrades in the stock on Friday morning. Stock down 11% on the day. Arista Network earnings send that stock lower by 10.44%. Fortinet now, FTNT, been a darling in the software space rather, down 6% following their earnings. Activision Blizzard earnings send that stock lower by 4.8%. And Skyworks, SWKS, 3.5% to the downside following their earnings announcement. Not a ton to speak of today. We'll get some reports after the close. Earnings start to slow down here. Past 2 weeks have really been the heavy weeks for earnings. But Friday's surprises, American Tower beat by 4 cents. Dominion Energy missed by 2 cents. I mean, just energy, not a lot going right in that group right now, unless you are APC and the takeover going on there. Dish Network's met estimates. Stock has a bullish rating here at Chaikin Analytics. So let's get into it now. Let's dive into what we're talking about in our note today for Chaikin Analytics clients. It's macro day on Monday. We look at themes across the major markets, whether it's equities, fixed income, commodities, currencies. We've been highlighting small caps for a long time as something that's been an underperformer, right? We've favored large caps for our equity exposure. What does that mean? That means that for the rally, large caps have been outperforming small caps. They're both going up. Large caps have just been going up more. We finally get a breakout out of this consolidation. We've been highlighting resistance at the 160 level for IWM, the iShares Russell 2000 ETF. We finally get the breakout from the consolidation, but we're likely to pull back here today, right? Markets are under pressure. We're not going to argue with that. But what's interesting to me is that the breakout could not induce an overbought condition, right? First attempt at the level, deeply overbought condition, consolidation. Now, we don't get oversold. RSI doesn't get oversold. But on this breakout here, we actually have a negative divergence, and that's why I've put this section of the RSI in the box here. This negative divergence says that maybe the recent activity doesn't have as much momentum behind it as you would think. I would also note that the 200-day moving average is still declining. Money flow is bullish, so kind of a mixed bag here for the IWM. Could it work on an absolute basis if the markets trend higher? Absolutely. Do I think that small caps are going to underperform large caps? I still think that that's the trade until proven otherwise. I also think that this breakout may prove to reverse here today with weakness in the equity market. Downtrend in the 10-year yield remains in place. We've been highlighting this one for a while. TNX, the 10-year Treasury Yield Index, below the 50-day moving average, below the 200-day moving average, solid resistance at the 2.6 level. Support lies down below at about 2.4%. Notice the downward shift in the RSI, two bearish ranges, confirming the bearish trend in yields. And with a flight to safety here today, likely I would expect yields to move lower. I'm not calling for a big break of the 2.4 level here, but I do think the 2.4 support level for the 10-year yield is in play. So the downtrend remains in place. What does that mean? Look for the bond proxies to hold recent support. That's real estate and utilities. And ideally look for them to start to outperform. Now, they're not outperforming. So we're kind of watching them and not getting aggressive on the long side the way we did when they began to outperform back in the October-November timeframe. But we are watching those bond proxies closely as we watch all areas of the market closely. And now crude oil is at an inflection point as well. Crude has pulled back. We've been highlighting 67 as a resistance level for crude. Now we've pulled back. We've got kind of 59 to 61 as support, which holds the 50-day moving average, which is moving higher, and the 200-day moving average, which is moving lower. Potential golden cross, but we'll note that it is a cross of a downward sloping 200-day moving average. RSI working off overbought conditions, and now we'll see if RSI can hold above 40, and that would signal a potential move higher for crude. So that's why we say crude is at an inflection point. But what's interesting to me is if we look at XLE, the energy sector relative to SPY, is that even despite this rally in crude, XLE continue to underperform, and now we've had a breakdown. So even with crude moving higher in the near term, energy still remains under pressure. We remain cautious on the energy group, just not an area where we want to go bottom fishing just yet. So that's going to wrap it up for today. Sorry about that little mishap in the middle of the show. Just wanted to make sure I had the right ticker symbols for you. And as always, head over to ChaikinAnalytics.com/today. Sign up for free email. Follow along with this show. Get daily stock ideas for you to consider every trading day. I will see you back here tomorrow.